We're going to go straight to part two this week in macro. We've got a bunch of stuff to cover in the macro. This is going to be the main section where we're going to be covering whether the Fed is dead and whether they're going to take Europe with it if America goes down with the Fed. So let's cover everything that happened this week in macro, and we're going to give you the latest news. So firstly, I want to give a few updates on the impact of tariffs from the data that we know. Now, one of the data points that I was looking at was Berkshire Hathaway. So it's the investment company, one of the major players in the equities proof of weapons network. They published their quarter two results, and they were pretty brutal, to be honest, and they gave us a lot of insight into what's happening as a result of these tariffs. And so their operating earnings had dropped by about 4%. So that's to $11.16 billion. They're holding a lot of cash because they've come out of a large part of their Apple shares. But their net income plunged by nearly approximately 60%. And so Berkshire executives were giving their normal speech, and Warren Buffett and the team were pointing basically that everything is coming down and it's directly due to tariffs. So they pinned everything on their portfolio underperformance due to tariffs. Now, whether we are to believe this or not is an important thing for us to data point. I just wanted to push through. But basically, they were saying that their supply chains are disrupted. Now, I've always talked about the whole play with tariffs is to drive the world to BRICS, is to have consolidation of power from SMEs going bankrupt that will be acquired by the large corporate entities, and every supply chain disruption leads to more bankruptcies and small companies that will lead to a flurry of M&A, as well as strategically weakening the dollar so that you get these capital outflows and you can move to this multipolar world order. I personally believe that Trump was installed in order to execute that strategy. And that's why we're having these real challenges with the Fed and the attack on Federal Reserve independence, which is one of the cornerstones of what makes the dollar the dollar. And so anyway, with these tariffs, we've had orders delayed. Initially companies were sucking up the tariff, but eventually they're going to have to pass it on. And essentially it is a tax because the importer, and America is a net importer because they run a trade deficit as well as a fiscal deficit. They spend more than they bring in, and they import more than they export. And so therefore, it is the importing country that normally pays a tariff. Some of it might be borne by the exporter. America's about 70 to 80% services and about 30% goods. So the goods normally relates, the tariffs normally relates to those that are actually producing the goods that are manufactured abroad, or their raw materials that come in. And essentially the 350 billion that has been brought in is a tax on American corporations that will inevitably lead to higher prices. And we shall see. It will take some time to actually see that priced in. But basically, shipments are stuck. They're not sure, insurance premiums are going up. And planning is incredibly hard in this environment because the deadline keeps changing. And you've got another 90-day extension with China after a 90-day extension. And so this is kind of the ever-increasing problem. And the longer it goes, the more vassalization, the more bankruptcy of small companies, and the more consolidation of power. It's kind of like, the COVID and the lockdowns, where you end up consolidating into the tech companies and Amazon versus the retail shops. And you get a lot of volatility. And this can make everything worse. Unless you're at the top of the chain, but unless, and that's what we're seeing. But essentially, the dollar weakens is the cost of this policy. And this can lead to a foreign goods price spike. And the idea is that it can increase manufacturing internally, but America doesn't have a strong manufacturing base because it's too expensive to produce these goods internally. And so you probably end up with robotics and artificial intelligence, and then that has employment side effects eventually. So we got this whole cycle to go through. And as a result of that, insurance underwriting took massive losses. And so that increases insurance premiums, makes everything more uncertain, and makes all the problems with the supply chain. So every single Berkshire Hathaway business was feeling the pain, according to this being consolidated in that drop that they in their numbers that they reported. It wasn't one segment that escaped the damage. It was essentially all of this, the different sectors in this portfolio of Berkshire Hathaway. And so this is really the bit that most people don't understand about tariffs. It was framed as a tax on foreigners because foreign countries have been ripping off America. But actually, it's, has the opposite effect. It's basically a tax on the American corporations that leads to inflation in order to rebalance the portfolio, in order to weaken the dollar to have those side effects as well. But they're essentially import taxes paid by American companies over to the American government. Now, that would be interesting if they were balancing their books, but that would lead to a depression because the dollar is debt. And so nothing stops this train, as Lyndon Alden always said. And so you end up with increases in debt, but theft of revenue, and a weakening of the dollar. And that is the net impact, as well as consolidation of power, because you're not actually affecting the trade deficit or the fiscal deficit, because you're still trying to be world reserve currency while weakening the dollar. And so you get this very skewed strategy that's very confusing for most people. But it's not free money from foreign companies and countries. It's the opposite. It's a tax on the American corporations to the government. And so Berkshire was affected, Apple was affected, Nike was affected, and they pay these fees directly. They either lead to higher import costs, and this is an impossible choice that they have to make. You either raise prices and lose customers, which can be demand destruction, because most of the consumption is from the top 10% of Americans because of the K-shaped economy, where the rich are getting richer and the poor are getting poorer. And so you can have demand destruction where those people that can't consume and afford those products don't consume. And so you have to raise your prices in order to do that, and you have to deal with the demand destruction. Or you have to basically cut workers, reduce capacity, or become more efficient and invest in artificial intelligence and robotics. And that's inevitably what many of these companies are going to eventually do. And so the corporate earnings are shrinking as a result, but there is consolidation as well into the top, because the small to medium price enterprise, they're going to be sold in distress. And this is going to create a mountain of mergers and acquisition in the private equity field. And that private equity can also be dumped into your 401k so they can flip it. And obviously, Wall Street and BlackRock and various institutions are going to be playing all of these different parts of the portfolio while they hedge as a volatility within the market manipulation that happens as a result of all these announcements. Now, the market is becoming less prone to these announcements. But what are we getting, the Federal Reserve concerned about right now? Well, what is the Federal Reserve meant to do? Well, obviously, if you're a BitcoinHardTalk listener, you know that they work for the banks, and the chairman is a puppet for the banks. They meet every 3 months, and the shareholders of the Federal Reserve are the private banks, and they have this cushy mechanism of socializing losses, privatizing gains, giving themselves a lovely dividend. Just having a rejig here, giving themselves a lovely dividend based upon the assets that the Federal Reserve holds, and being able to manipulate interest rates in favor for a strategy for the banks. And they're told Fed independence means that you're doing it for the dual mandate, which is inflation and employment. And so what we're hearing from Jerome Powell, who is going to be retiring in 2026, June next year, is that employment is not a bigger deal or as big a risk as inflation. And so at the previous meetings prior to Trump coming in and creating this theater of both Jerome Powell and Trump, who both work for the banks, because Trump is primarily funded by the banking lobby and the tech lobby. So they have the same boss, but you get to have this fight where they get to blame each other. It weakens the dollar. And it looks like you have a nice MAGA narrative that Trump has taken down the Fed and taken down the banks. But in reality, they both work for the banks. And you get to focus on whatever the narrative is or whatever the agreed strategy is. And so because America is approximately 70 to 80% services, and because the goods and tariffs is kind of these two twin inflationary forces. You got inflation on the goods through tariffs, but you've got the money printing in terms of the service industry. We don't know what the impact of tariffs are on the goods side yet, but we are starting to see inflation, as we covered last week. The PPI, the producer price index, ticked up to about 3.3%. And now annualized, the consumer price index is above 3%. It was 2.7% before. So inflation is going up. And what was it that Jerome Powell was saying before? Where he was saying, we'll work from the data. And we don't believe inflation has been fixed. So there's no justification for cutting rates. The employment numbers seem to be fine. But Trump then suddenly comes along and says, there's $3 billion of fraud. We're going to get the Department of Justice to investigate how this happened at the Federal Reserve and implicating Jerome Powell. And you had that humiliation ritual that we covered in previous episodes, which, again, destabilization of the dollar. But now we get a demonstration that the Fed is not independent. Now, what most people are saying is they're saying, yeah, the Fed isn't independent of the government. And now the government is winning here. But the reality is that the government through lobby works for the banks and the Fed through shareholding works for the banks. And so it is really the bank's policy. The banks own the Federal Reserve and the banks are public companies owned by BlackRock. BlackRock is the asset manager that holds the largest shareholding in via State Street, Vanguard, and BlackRock. And so through this mechanism of the proof of weapons network and the power dynamics, because all of these companies are now securitized, financialized, and public, you get this kind of most people thinking the government control the Fed, and therefore there is no Fed independence. That weakens the dollar, as we saw with Powell's speech today. Trump gets his narrative, but really the banks and the proof of weapons network are sitting on top, maximizing for their own vassalization of financing acquisitions and consolidating into the BlackRock portfolio companies at the expense of Main Street over to Wall Street. So basically, Trump is doing the fiscal dominance strategy. Fiscal dominance means that the government is just spending, refinancing the debt. And as it refinances the debt, you're getting basically the tool that the Federal Reserve has, which is the short-term interest rate which is you could correct it. And all that does is it gives you the ability to refinance the debt short-term, but the long-term 10-year loans, 30-year loans are going up. So the cost of actual mortgages, auto loans, credit cards, the real economy is going up, but the government refinancing their debt is going down through fiscal dominance, so you can inflate away the debt. And this leads to massive asset price inflation in real estate, Bitcoin, gold, stocks. But the K-shaped economy gets worse and worse and worse. So essentially, it's more consolidation from small companies into large companies, and that's what you need to follow. Now, because America, the government, is subordinate to the proof of weapons network, and the Federal Reserve is owned by the banks, which is subordinate to the proof of weapons network, which is the consolidation of the financial industrial complex, the military industrial complex, the technical industrial complex, the pharmaceutical industrial complex, and all of the consumption industrial complex based upon all the debt and all the credit cards and all the rolling over the debt and the massive consumption on credit cards and debt. You can vassalize all the American people, all the American businesses, and the American government into the proof of weapons network, as well as those that are subordinate to America, which is the vassal states of America, which is UK, Europe, Canada, Australia, and various other dependencies like global South companies that are IMF debt slaves that haven't liberated themselves by working more east rather than America, like Mexico, and various other ones as well that are caught in the middle. And so that whole, obviously, the vassal states of America are also owned by BlackRock, which also has all their own puppet politicians that are printing money through the European Central Bank, the Bank of England, in order to inflate away the value of their debt, have a K-shaped economy where nothing goes to the British people, the European further into the proof of weapons network with BlackRock as the CEO. So what was announced in the trade deal? Well, the big news this week was the US and the European Union came to a trade deal. Now, if this wasn't vassalization, I don't know what is. And now most people will be thinking, yes, America is winning. No, you're negotiating for American companies to steal taxpayer money. And that is exactly what's happening in the European side, the UK side, and they get to beta test all of their police state, their surveillance state, all of the different civil unrest campaigns. You get to beta test them on Europe and UK, while all of the assets across the country, like Thames Water is being bought at distressed in private equity by Blackstone, so they can later go public through JP Morgan and Goldman Sachs, so that it can be just an asset that can be asset stripped into the BlackRock portfolio. And they don't need to care about water because it's no longer a national interest. It's just an asset to be asset stripped, sold off, vassalized into the BlackRock portfolio companies and the proof of weapons network. Okay. So basically, what is happening as a result of all of this? Well, the US is becoming more and more isolated. BRICS is becoming, many of these countries with these trade deals are going further east and they're starting to trade with BRICS. BlackRock is invested in the entire global ecosystem, but uses America as a host company for its stock market and the Federal Reserve for printing money for its banks. And so it doesn't care about America anymore. And so you can buy politicians like the Trump administration, get the deregulation environment, and also get the ability for Trump to negotiate for BlackRock, but dress it up as doing it for America. So the strategy, I believe right now, is to turn the European Union and the UK into a toxic asset for complete asset stripping, for the BlackRock portfolio companies to purchase. This is vassalization in motion. What you are seeing in Europe and the UK is what happens when you have this strategy. So what was the European Union and the US trade deal? So let's go through some of the points. So the first was US to impose 15% terms on most EU imports. So importer pays the tax. That is, the corporation needs to increase the price and it leads to more goods inflation eventually. That is a tax on the American people. And then the government gets the revenue from it. So that's the first one. The second is US to lower auto tariffs once the EU passes matching tariff cut legislation. So this is to do with the car industry. So whatever tariffs come from the car producing countries, you've got like Volkswagen and various other, mainly affects Germany and some tiny bit of industry left in UK, like Bentleys and luxury cars. And then you get matching tariffs. So you get the same effect as a result of that. So, but whoever imports more is the one that's going to be handing over more money over to the government at the same time as the government printing more money to give to the corporations. What's the third part of it? So from September the 1st, US will apply only most favorable nation tariffs on the European Union. And that's going to affect the aircraft, parts, genetics, the chemical producers, and scarce natural resources. So same impact there as well. The fourth part of it, so, you're going to have this additional import tax upon those resources between the partnership between the European Union and the US. So essentially, US becomes, what am I trying to say? The EU becomes more vassalized and to a host nation for US corporations. Got it. The fourth part as well is that the European Union will eliminate tariffs on all US industrial goods and grant pharmaceutical access for the US. And this also affects their seafood, agriculture. So more specific terms there as well. Now, the European Union says that it's going to buy $750 billion in US liquefied natural gas and oil, and its nuclear products as well. Now, we've covered this in previous episodes, that America can't even produce that amount of LNG and gas. And so it's still European Union, while pretending they're sanctioning Russia, is getting a bunch of that from Russia. And there is no substitute for it. So that 750 billion won't happen, but to the extent that it can happen over the next decade or so, basically the European Union, which is completely broke, prints money through the European Central Bank and then has to spend it on US corporations, further vassalizing the EU and the US into those US corporations. The European Union will purchase at least $40 billion in US AI chips, so supporting NVIDIA. So basically negotiating for Chevron, negotiating for ExxonMobil, negotiating for NVIDIA to do more sales by the money printing of the European Central Bank, so that those technocratic states, and you can destroy the manufacturing base of Germany because the LNG and the oil is too expensive relative to what it was from Russia, is, again, further vassalization and bankruptcy of the European Union and the UK into the distressed asset purchases by the proof of weapons network. Now, European Union firms are going to be investing $600 billion in US strategic sectors by 2028. Make that make sense. So a country deep in debt that doesn't have its own resources, with the exception of countries that are not in the European Union, but are in the European Economic Area, the EEA, like Norway, they're not going to be doing it. So how is the European Union, that doesn't have a sovereign wealth fund, going to be investing $600 billion? Well, it's going to be contracts with US corporations, so that they can essentially, European Central Bank can print money, steal more money from the Europeans, and prop up the GDP and the stock price of America, which is creating more of the K-shaped economy as well. Enrich those that own stocks, which is the importance of owning assets, at the expense of the European people as well, that don't own those stocks, if they don't own those stocks. They said that they'll be exploring cooperation on steel and aluminium markets, aluminum in America, and protections from that as well. So those industries where it's going to be needed. There's going to be a joint commitment to tackle digital trade barriers. The European Union pledges not to adopt a network usage fees. It also said it's going to be considering measures for secure supply chains, including tariff rate quota solutions. And basically, this is the fiscal dominance strategy. America is going to be printing the money, going deeper into a fiscal and trade deficit. It is going to be giving over those revenues that are printed by the European Central Bank and the Bank of England over to BlackRock portfolio companies so that they can further vassalize and strip more and more of the assets. It's only going to get worse for Europe. It's only going to get worse for UK. And they are fully subordinate to the proof of weapons network at the same time as militarizing and taking more and more of the budget of the country in order to purchase more weapons, which is Trump's deal. He's just a salesman for the military-industrial complex so that we can just further enter into an ever-increasing war economy, and we'll be covering more about this into the geopolitics side, how this trade deal does it. Basically, fiscal dominance is the strategy which takes away from some of the tools of monetarism that the Federal Reserve has. And so we're told that it's really important what the Fed does with interest rates in September. And it culminates in this big announcement where the Fed said there's no justification for cutting rates. But suddenly we get a meeting today by Jerome Powell, which will be followed up by a meeting with Trump, where Trump basically gets to say there is no Federal Reserve independence. Jerome Powell capitulated, and he wants him to cut rates, and so therefore he will cut rates. So what does the Federal Reserve have to do once you take away the tool of interest rates? Because the long-term rates are not adjusting. The short-term rates is just about fiscal dominance. It's about refinancing the debt on the short term to roll over the debt, and maybe you'll do it through stablecoins. Maybe you'll do it through all sorts of different tools, but it's being done by Treasury and government, which means it's not being independently done by the Federal Reserve, which was the cornerstone of dollar strength, is the independence of the Federal Reserve from the government. Any other currency that has been vassalized into the proof of weapons network, like Turkey, you have that massive, issues with the currency as a result of not having independence, which was, I think the Turkish central bank got fired by the Erdogan administration like 10 times or something as we went through the IMF's financial weapons of mass destruction, creating the hyperinflationary cycle within Turkey. So at the same time, what did we get? Well, this week, or I think it was earlier this week, we had some fears from the Federal Reserve's reverse repo market. Reverse repo is the short-term borrowing between banks at the Federal Reserve, the overnight borrowing. And it dropped to its lowest level in basically 1,596 days. Remember, we had this reverse repo problems where the market dried up. The banks didn't want to lend to each other on the overnight market. But essentially, the reverse repo market is where institutions, they park their excess cash at the Fed. And so those accounts are drying up. So you don't have the reverse repo excess reserves at the Fed. We're told that the American Treasury is going to be topping up as much of its account at the Fed. And at the same time, we're getting this decrease in Fed independence while liquidity is leaving the market, or the reverse repo market, which is essentially the safe parking lot, as it were. And it's flowing elsewhere. Where is that money flowing elsewhere? Well, most likely is leaving reverse repo and buying treasuries into these auctions. So we're draining that tool as well. This is leading to those long-term yields soaring and going up. It's not yet a crisis at the moment, But we'll keep having to watch this market as well. And basically, the cushion that is held at the Federal Reserve as the lender of last resort is shrinking. And so any shock or trigger into the market could lead to a real squeeze. At the same time as the Genius Act saying you can use your reserves to issue stable coins, which the Treasury can use so you can take out the reserves there through stable coins. As I said, I'll keep watching all of these different markets, but really the traditional tools of the Fed are dead right now because whatever you do with short-term rates, it only helps Treasury and fiscal dominance for the government to run the market hot, pump the price of assets in order to roll over the debt-based Ponzi scheme in an environment where there is record fiscal deficits, trade deficits at the highest levels just before the global financial crisis, the dot-com boom and bust, and they are doing whatever they can to roll over that as well. So what did we get today? Well, today was this big meeting where we're told that Jerome Powell is going to hold strong, and Trump is saying, I'm going to get rid of Jerome Powell. He needs to be fired. Well, Jerome Powell did his speech. And what did Jerome Powell do? He caved. And so what does this show? So the majority of the world is saying, see, the governments are in control. The Trump administration is in control. Little do they know that they are subordinate to the proof of weapons network, and the banks chose Trump. He's the chosen one from the financial industrial complex, as well as Jerome Powell, who works for the banks through the Federal Reserve. So the banks basically won, but Trump gets to give the MAGA narrative, the dollar gets to be weakened, and we have independence of the Fed called into question. So the speech today was in stark contrast to the last speech by Jerome Powell, where he's saying the data saying we just don't need to cut rates. We'll continue watching the data. We're concerned about tariffs, he would be saying, and we want to focus on inflation. But what did he say? So, quote today, Jerome Powell said the shifting balance of risks may warrant adjusting our policy stance. So it appears that the Fed chair, Powell, is basically setting the stage for basically a September rate cut. Now, it will probably be token. It could be a quarter of a point. It could be 50 basis points. It may be a compromise. Imagine if it was 300 basis points. Basically, that shows no Federal Reserve independence. I'm sure it is negotiated to whatever the strategy is. But basically, the Federal Open Market Committee, the banks, BlackRock, and the financial industrial complex, and Trump are all aligned. And that's why this is happening. And that's why we got pivot in narrative, because Powell is just a puppet for the banks, as is Trump as well. So Powell admitted that basically the economy is weaker. So it was saying, and that was in stark contrast. He was saying the economy is very strong. And inflation is stronger this year than under Trump. It was stronger this year under Trump than under Biden. So that was part of the narrative that was admitted. But it was kind of a narrative that's similar. We'll cover it in the geopolitical section, that kind of Putin said something to appease Trump. He was saying, yeah, the war may not have happened under Trump but it happened under Biden. Putin kind of said that. We'll be covering more in the geopolitical section. As kind of Powell did here, it's kind of showing a little bit of Powell is capitulating to Trump. It's kind of the optics of the humiliation ritual. Meanwhile, what's happening to the dollar? Well, the dollar is being weakened again. And so it had its strengthening cycle. It went above 98, and now it's below the $98 in terms of the DXY. So now we got it below as a result of this. And the end result is, of course, with stable coins, with the Trump administration, with the sophisticated investors that are lending, they're selling US dollars and they're buying fixed assets. So gold went up, Bitcoin went up on this announcement. And basically Trump is running the economy hot. And it looks like Trump pushes Jerome Powell based upon the office fraud and the humiliation ritual that we covered in previous episodes of Bitcoin Hard Talk. We got more and more announcement that the Department of Justice is going to be planning to investigate the Fed governor this time. So Fed Governor Cook and basically Department of Justice officials are now going to be urging the Fed Chair Powell to remove her. And now there is the potential of 4 seats at the Federal Reserve that Trump can fill and remove this dollar independence. Did we cut out online for a bit? Okay. Okay, so in a nutshell, we've basically now got 4 potential seats for Trump to fill, and he can keep filing these fraud claims or tell people to fire, and we can keep getting these humiliation ritual. One of them is Fed member Hammack basically came out and he was saying prior to this announcement from Jerome Powell that looks very dovish, and we'll see what actually happens in September in the end. But he was saying that he does not see the case for the September rate cut. And obviously there is no case for the September rate cut because inflation is still a problem. So all of this, everything, all roads lead to inflation and the K-shaped economy. That is the strategy. The whole facade of balancing the books, working on trade surpluses and paying down the debt, as we've always said, you can't do it. You can't do it. So there were some Fed minutes that came out. And what was it saying? It's many saw inflation risk outweighing employment risk. So this is that twin mandate. And so if you're focused on inflation, then you wouldn't reduce rates. But now if you see narratives talking about employment, that might be manipulation of data, which comes to corrections of data in order to justify this fiscal dominant strategy that the Trump administration is saying they want to do. So all in all, the September rate cut is irrelevant. The Fed is dead in terms of this tool. And when they want to use their new tool to rug pull the economy, they'd have to use a different tool because the short-term interest rate is just not that tool. But Trump wants a 300 basis point cut, the highest cut ever in Federal Reserve history. And how will the long-term rates interpret that? They'll interpret that as weakness. So that crashes bonds, which is inverse to yields, and the rate that the government needs to pay will go up as well. And so we'll keep watching that 10-year Treasury and 30-year Treasury. Another thing that happened while we were watching this is that there was an announcement that the US Treasury bought back approximately $4 billion of its own debt. So the issuer of the world reserve currency, the Treasury, is basically in the market to buy back its own IOUs. Now, this is what was done under Janet Yellen, under the Biden administration, as well as what's happening under the Trump administration. So they're following the same strategy. But what are they doing with these $4 billion buybacks? Basically, the Treasury has been buying back their longer dated maturity by issuing shorter dated, more liquid maturities. What does that mean? That means they can leverage up. There's deeper liquidity, and those may be the very same instruments that they could use to back up their stablecoins in this fiscal dominant strategy. It's basically what Trump needs in order to get the rates down, but just to inflate away the debt, but it doesn't impact the long term. And so this is just the same refinancing, everything moving towards the distressed market strategy. It's got nothing to do with inflation or employment, which is what the Fed's meant to be focusing on. But if you get a rate cut, it is because of the fiscal dominant strategy, which again is removing that dollar independence. This is the Fed losing power, but it was the banks that were always in power or anyway. essentially, this could be stable coins being issued closer to modern monetary theory. And that modern monetary theory could be done under who's likely to be the 2028 president, who's being prepped to be the 2028 president. Well, that's J.D. Vance. And who's J.D. Vance backed by? Well, he's backed by, while they're backing it by the longer, J.D. Vance is backed by, he's Peter Thiel's guy. And he was the guy that was brought up and kind of groomed to be the president under Peter Thiel. Does this not look like the technical industrial complex having stable coins, more military industrial complex technology, cybersecurity, artificial intelligence, drone integrations, at the same time as taking shares from the financial industrial complex? So this, I believe, is a BlackRock portfolio rebalancing based upon the reality of how it is right now. Now, they can continue to use the Fed balance sheet, so quantitative easing, or they can continue to use the $3.5 trillion of reserves that can now, through the Genius app, be used for stable coins. And so essentially, they can use negative yielding stable coins because inflation will go up and there's no amount of yield that's going to compensate for this as well. And so it's a disaster investing in government bonds at these stages, which is why they have to pay an ever-increasing higher result of it. The government is taking more and more power while generating more and more revenue, while increasing the trade deficit, while increasing the trade budget, while increasing the debt ceiling, while becoming a bigger and bigger and bigger monster. And who's receiving all the money? Crony capitalism and the proof of weapons network. This is completely in line with the proof of weapons network strategy. And who's going to be likely the 2028? I'll say it right now. In my forecast, I did, if you go back through my channel, I believe that Trump was going to win. I then said it was Biden, and then I went back to Trump. And I'm now thinking it's going to be J.D. Vance in 2028. Vance is Peter Thiel's pick. That is a technical industrial complex. If you look at Peter Thiel, if you look at J.D. Vance, he was given a fake military career. He was a journalist in the military rather than painting him as some, war hero. He was also a fake venture capitalist because he was funded through the venture capital industry by Peter Thiel, given a role with Peter Thiel's VC fund, giving a fund to run. And then he has this background, which was fully backed by Peter Thiel. And he's also basically he was always given this, this fake political rising to being the vice president. I think he's being picked for the 2028. And I think he's the perfect category for 2028 being the surveillance state, the police state, based upon all of the policies that the Trump administration has been implementing. Inflation is the cost of fiscal dominance. So everybody needs to prepare for higher inflation. It's above 3% now. And I think it's going to be structural above 3%. But everything leads to more inflation, more manipulation of numbers. And what is the cost? Inflation is the cost and surveillance is the cost. The beneficiaries, asset price increases. So if you're saving in cash or you're investing in bonds, you'll be negative net losses. And you have to have assets which benefits Wall Street at the expense of Main Street that will be paying the additional price through tariffs. The other cost is the social credit score that I believe is coming. And you can look at this basically kind of, we always have the phrase, every accusation is a confession. Well, they're always accusing China of having the social credit score. Well, that's the same thing that I think is coming to the US with these stable coins. And the only way to beat it is to own your own assets. What assets? It's got to be fixed supply assets. The ultimate fixed supply asset, I believe, is Bitcoin. And so Bitcoin in self-custody was why I wanted to play that video, and I'll refer you to my blog later as well. But wealth inequality only creates civil unrest. And that's why it needs to be held in self-custody. And that's why they want you to own it with them. There is no alternative strategy that I can think of. And they will carry this strategy on until the last bond is bought. And they're going to dump those bonds onto you, the American people, because less and less foreign purchasers are buying those bonds as well. And so that is the strategy of the Trump administration. Rather than the Fed doing the quantitative easing, it could be Treasury doing stablecoin quantitative easing. We shall see. We'll keep reporting it. But that is the world that we are transitioning to. Basically, Trump said he's going to make a huge announcement today. Maybe that's happened while we're going live. But after we had Jerome Powell's dovish speech, which will be framed as a capitulation, and then we'll see exactly what happens with the Trump speech, and I'll cover that next week as well, because it may be happening now or it may be happening after this as well. And follow me on X in case you want real-time financial updates that I do on a daily basis as well. Now, we've been talked about how stable coins could lead to dollar dominance globally. There is obviously a massive resistance against that because America retaining its world reserve currency is more of a victory for the military industrial complex because dollar dominance means more war. And we've got to get to multipolar world, which is what I think the financial industrial complex wants. And that's why BlackRock is investing in the multipolar world order, but the military industrial complex may want dollar dominance. So that might be the power struggle between the financial industrial complex, military industrial complex, and of course the technical industrial complex, which is being the beneficiary of some of the power of both of those. And that's the type of struggle that we'll be watching as well. Now, speaking of the multipolar world order, let's have a look at some of the things that are happening globally while there is this debt rollover strategy within America and the debt crisis. Russia says that it will keep selling its oil to India, whether there is sanctions or whether there's tariffs or not. And so sanctions are proving that BRICS can still trade together local currency no matter what happens, whether there's tariffs going to be threatened, is drawing them closer to each other rather than anyone capitulating. US imports from Russia went up in 2025, 25% this year. Oops, they don't want you to know that. And yet they're coming after India, even though the US is actually importing more from Russia and European Union is doing the same. So it's a massive hypocrisy when you understand how it goes. India is now pushing closer and closer to BRICS as a result of the tariff threats as well. China and India, they're basically buddying up, challenging the US hegemonic complex, as it were, the US hegemon. The seeds were sown in basically October 2024. So Modi and Xi, they met at the BRICS summit. They were speaking, at that summit. They decided that the troops that were on the China and India border, they've been discharged and they solved their border dispute. So that one was being resolved. And by 2025, direct flights resumed after basically 5 years of ceasing trade and flights. And now the travel restrictions have been removed between India and China. And basically the US tariff that was a threat from Trump, where they said they're going to imply a 25% tariff on India, and then it spiked to 50% if they continue to work and purchase Russia. It basically, is among the highest globally, and all it's done is push China and BRICS and Russia all together as well. And so they said they're going to put a 10% to 100% tariff on any BRICS members, basically all pushing the multipolarity, which I believe is all in line with the BlackRock strategy as well. So India is now leaning further into China. China's now leaving further into India, despite the fact that we're told the opposite. And Russia is pushing basically the Russia, India, China talks is getting closer and closer, and they're coming back with unified front negotiations. I think that's everything I wanted to cover on that side. Let's have a look. A few more stats as well. India exports to China, they jumped by 16.4% by June 2025. That's a $1.38 billion that was done as a result of that. The rupee trade rises between China and India as well. So this is, making less trade in US dollars as well. The USAID sponsored media. I'm gonna push on as well for some of those stuff. Okay. I'm gonna cover more of that next week, I think, as well. Let's get through the macro stuff. I was going to give a little bit of an update. I think I'll do this next week. On the whole artificial intelligence trade war between China and US. Let me know in the comment section whether you'd be interested in that. I pulled out some interesting stats. I think we've got to really follow that one as well. But Trump's role to strengthen BRICS, I think it's really happening. And I think the data, it would have been done under Harris. This isn't about Trump derangement syndrome. It will happen probably under JD Vance in 2028 as well. But I'll cover more upon that. There was a little bit of drama that I think is worth talking about as well, because all of this, I'll cover more on the chip war, the AI war as well. But they're looking to revive Intel. Intel had a bit of drama with Trump. Trump was basically saying the CEO must step down. He had a demand that the CEO, not CIA, Freudian slip there. The CEO must step down. That led to approximately a 50% crash since 2024 that culminated in Trump saying the CEO must step down. The US government is now saying that it will invest $8 billion under the CHIPS Act, and they're going to get a 10% revenue in the chips from NVIDIA as well. So this was part of the CHIPS Act before. Under Biden, there was a $50 billion budget. I think Trump was saying he'd like to get a 10% revenue share. And we're seeing more and more of these types of deals, like NVIDIA and AMD. If they export to China chips, the government or the Trump administration wants a 15% cut as well. So we're starting to just see this larger and larger involvement with governments into these corporations, but the revenue's coming through, and they're allowing them to do these increased trades that then lead to these negotiations as well. The condition was that the CEO steps down, and then there was an announcement that SoftBank is going to be investing $2 billion into Intel as well, but SoftBank doesn't really have that money. They would need to borrow that. It would need to be some kind of new refinancing. So it feels a lot like stock market manipulation. It feels like, really strange types of announcements that are leading to big corrections in prices, and I'm sure a bunch of insider trading. And to end all of this in the macro section, we got the announcement of all announcements, which is to remember all of that stuff that was happening with Klaus Schwab at the World Economic Forum. Now, obviously, these people have all sorts of allegations against them to have strategic leverage, as the Proof of Weapons Network has these, World Economic Forum organizations that pay their fees in order to set the world orders, the trades that they're going to be doing. It's a decentralized Proof of Weapons Network that sits on top of government and is able to use lobby money. They can redirect lobby money in order to reset these world orders. Well, the proof of weapons network CEO I call BlackRock at the moment, which is measured by the assets under administration being bigger than any of the other people. But they decided to announce, as Klaus Schwab was shamefully removed as they started to say all of these different allegations around, obfuscating money from the World Economic Forum for personal gains, employee disputes, sexual allegations, all sorts of stuff. They decide strategically when to release it. That's why these people are in these positions. But the World Economic Forum announced their interim chairman of the World Economic Forum. And guess who they chose as one of them? You guessed it. Larry Fink of BlackRock is now the chairman of the World Economic Forum, as well as CEO of BlackRock, of the largest contributor to the proof of weapons network that I believe is organizing many of these vassalization strategies in a decentralized network that meets at these World Economic Forum meetings and also provides the technology for all the fund managers, the advisory and artificial intelligence technology for the Federal Reserve, and the advisory and artificial intelligence data and technology for Treasury, while having board seats on 20,000 companies, resetting the world order, and having access to vast lobby funds and the ability to control capital flows through policies like ESG. And the Dutch East India Company, the British East India Company, it exists in this new form, and it's called BlackRock, and it's a proof of weapons network, and it doesn't have allegiance to any one country. There's no national agenda. It is a-national, and it sits above and both all of these different countries that are vassalized, lobbied, and therefore all of these countries just work for the interest and wage wars against sovereign countries so that they can try and vassalize them and securitize and financialize their economies. And instead, when they don't win those battles or win those wars, they end up in a negotiation just like we're seeing in the Middle East, and a negotiation just like we're seeing in Europe, as a result of BlackRock negotiating against Putin via Trump, and as a result of BlackRock negotiating with Putin via the European Union leaders, and a result of BlackRock negotiating with the GCC, while Trump administers via his proxy Israel a genocide to get leverage by killing children in order to get better terms on deals as the GCC negotiates with BlackRock. And so that's going to do everything for part 2 this week in macro. This is everything that's happening with the Fed becoming dead, needing new tools as we enter into this more dystopian future as a result of the Big Beautiful Bill, the Genius Act, and the fiscal dominance taking out monetary policy, while they both work for the banks when they get favorable policies on their stable coins, and they take Europe and the other vassal states with it, while we transition to BlackRock's multipolar world order when we follow the money, and we'll keep following the money. So if you're liking this content, this is a good time for you to subscribe to my YouTube channel. Put any comments of what you'd like to see below. We take the big live stream, we break it into 3 different parts. So there'll be this week in Bitcoin, this week in macro, and we're going to now move over to the third part, this week in geopolitics. Just before I do that, I was going to play an AI video on the ability to self-custody. Now, last week I played that in the Bitcoin section. I'm going to be doing it in the macro section because we had a technical issue, and I want to take a quick water break. But the way to protect yourself from these trends is to own Bitcoin in self-custody. So we can boycott the Fed. We don't hold it through an ETF, so we can boycott BlackRock. And we can get ourselves in a position where we beat the performance of their products. Historically, we can't give financial advice and promise it will happen in the future. But those that have done that have put themselves in a position of wealth where they don't need to borrow against their Bitcoin. because they can just buy their houses outright and various other things. And then they can direct the flow of their money by taking control of their money. And so with that in mind, I'm just going to play a quick overview video from a blog that I recently created. You can see the blog afterwards on basically a guide to self-custody. You can listen to the intro video. You can listen to this little overview of self-custody. Can get a little bit complex, but don't worry, I've got you covered. You can sign up to the BitcoinHardTalk membership portal, get a completely free 8-module training on how to self-custody your Bitcoin, how to set up hardware wallets, how to back it up, how to understand the different decision-making. You can take your time with it, watch it bit by bit, do it in your own time. And so make sure that you've gone to simondixon.com, checked out this blog, and I'll just play the AI summary, and then we'll wrap this up and we'll move into part 3 this week in geopolitics. Azad, if you could play the video.
Welcome to the deep dive. Okay, so today we're really getting into Bitcoin self-custody. Basically how you can actually control your own digital assets. Think of it as your path up the, what's it called, the staircase of sovereignty, moving from relying on others to, full control.
Exactly.
And we're drawing heavily on the insights from Andreas M. Antonopoulos, particularly his book, Mastering Bitcoin.
A foundational text, for sure.
Our goal here is pretty simple.
Yeah.
Let's help you understand the key steps, the things to think about for self-custody. It all comes back to that saying, right?
Not your keys, not your coins.
Yeah.
It really sums it up perfectly.
It really does.
And what's really fascinating here is how different this is from traditional finance. It boils down to whoever has the cryptographic keys, they control the funds.
Your keys, your Bitcoin. Simple as that.
If someone else holds them for you, they're the custodian. They have the control. That slogan, yeah, it just nails it.
So, but it's not just like a black and white choice. Either full self-custody or nothing, relying totally on someone else. Andreas talks about hybrid options too, right? Things like multi-signature.
Oh, absolutely. It's definitely non-binary.
How does that work, the shared control thing?
Well, hybrid multi-signature setups, or multi-sig, mean you can share control, maybe with a trusted third party, right, or even just between multiple devices you own, like your phone and a hardware wallet.
Okay, so it's a middle ground. More flexible.
Exactly. It offers more flexibility. And this brings up a really important question for you, the listener. Are you ready for that full responsibility? Or does some kind of shared control feel better?
Right. It's about trade-offs.
It is. Balancing risks and benefits, especially when you think about your own threat model, basically. What specific risks do you need to worry about based on your situation?
And security isn't usually just one magic fix, is it? It's more about layers of protection.
Always layers.
When we talk risks, I mean, they could be anything from targeted stuff like SIM hijacking all the way to, I don't know, floods or fires.
Sure, those exist. But what's the most common problem?
Yeah, what trips most people up?
That's the crucial part. While, yeah, threats can get really sophisticated, even state-level actors for some people, for most of us, the biggest risk in crypto is, honestly, losing access because of simple mistakes.
Like what?
Like forgetting passwords, misplacing your backup phrase, or just making your own security setup so complicated you lock yourself out. It really highlights why simplicity, where possible, is actually a security feature.
That point about simplicity is huge and often missed, I think. It kind of brings us back to the absolute core of it all, the keys themselves. How does Andreas explain what a key actually is?
He puts it very simply. A key is just a number, but an unimaginably large number.
Unimaginably large.
Think like astronomically huge.
Yeah.
The sheer scale makes it basically impossible for anyone to guess your key. It's effectively random.
Okay.
These massive random numbers generated by your wallet software are what you use to create your public address where people send you Bitcoin and, crucially, to sign transactions. That signature proves you control the funds.
But managing a brand new key for every single transaction sounds like a nightmare for privacy, right? Is there a way to handle that better?
There is, thankfully. That's where hierarchical deterministic wallets, HD wallets, come in. Big name, simple idea.
HD wallets.
They use a single starting point called a seed. Think of it like a master key.
Okay.
And from that one seed, the wallet can generate billions and billions of unique keys and addresses. The huge advantage for you, you only need to back up that one single seed phrase.
Simplifies things a lot.
Yeah.
Better privacy, too.
Massively simplifies backup and management, yeah, and enhances privacy because you're not reusing addresses.
And the seed, that's usually shown as the mnemonic phrase, isn't it? The list of words.
Precisely. The seed gets converted into a sequence of typically 12 or 24 ordinary English words. Much easier for a human to write down and handle than a giant number.
But easier to mess up writing down.
Well, the order is absolutely critical. Get one word wrong or in the wrong place, and it's useless.
So storing that phrase securely is paramount. Is just writing it on paper good enough? Or should people be thinking about, more durable methods?
Paper is simple, and it works for many. But yeah, for real long-term protection against things like fire or water damage, people often recommend engraving the words onto steel plates or something similar.
Okay, metal backups.
But the absolute golden rule, no matter the medium, never, ever create a digital copy. Don't type it into a computer. Don't email it. Don't store it in the cloud. Don't take a photo of it. Strictly offline.
Strictly offline. Got it.
And critically, make at least 2 copies. Store them in 2 different physically secure locations. Think geographic separation if possible.
Right. Redundancy is key there too. Okay, so beyond single keys and seeds, we mentioned multi-signature schemes earlier. That sounds powerful for sharing control, or even just for one person managing, say, a phone wallet and a couple of hardware wallets.
Very powerful. It adds significant layers of security and control options.
So what's the most important thing for someone to keep in mind if they're setting up their own multi-sig, especially around control?
Yeah, multi-sig schemes are often described as K of N, meaning a transaction needs K signatures out of a total of N possible keys to be approved. A common setup is 2 of 3.
Okay, so any 2 keys out of the 3 designated ones can authorize sending funds.
Exactly. This gives you redundancy. If you lose one key, you can still access funds with the other 2, or it allows shared control. But the absolutely crucial point for you, if you're setting this up for self-custody, is to ensure you personally hold enough keys to reach quorum.
Quorum being the minimum number needed, like 2 and a 2 of 3 setup.
Correct. If you set up a 2 of 3 and you only hold one key while a third-party service holds another and maybe a lawyer holds the third, well, if that third party goes offline or becomes uncooperative, they hold one of the keys needed for your quorum.
Ah, so they could effectively freeze your funds.
Potentially, yes. It undermines the whole point of self-custody if you can't act independently. So make sure you control enough keys to meet the quorum requirement yourself.
That makes a lot of sense. It comes back to control.
It always comes back to control. And as we sort of wrap this up, it's really helpful to think of self-custody like Andreas frames it, that journey up the staircase of sovereignty.
Step by step.
Exactly. It's about building your comfort level, your technical understanding piece by piece. Maybe you start with a smaller amount on a phone wallet, a so-called hot wallet, before you think about moving larger amounts to cold storage, like a hardware wallet or that steel plate backup.
So you don't have to jump straight to the deep end.
Not at all. And what's fascinating is, even if full hardcore self-custody isn't your immediate goal, just understanding these concepts is vital, especially things like proper multi-factor authentication, moving beyond insecure SMS codes, for instance. That's crucial for managing any digital asset safely.
Yeah.
So it leaves a question for you listening. Considering your own specific circumstances, your own risk tolerance, what's maybe one small actionable step you could take, maybe even today, to move a little further up that staircase, to enhance your own digital sovereignty?
And some practical to think about.
Yeah. And of course, for anyone who wants to dive even deeper, the original creator of much of this thinking, Andreas M. Antonopoulos, has a wealth of resources available, online talks, books, articles, definitely worth exploring further.
Okay, awesome. And the one action you can obviously take is you can head over to simondixon.com and you can sign up to the Bitcoin Hard Talk membership portal, where you will be able to access all 8 modules to self-custody your Bitcoin completely free. And I know that was a lot to take in. It was designed for me to have a little bit of a break and to help you understand. You weren't meant to take all notes there. You can if you want, but we got much more in-depth content. It's something that everybody needs to do in order to learn how to self-custody your Bitcoin so that we can drain the swamp and protect ourselves from the proof of weapons network with peaceful proof of work. So just before we move over to part 3 this week in geopolitics, remember that if you can subscribe to this channel, if you're enjoying this content on YouTube, if you can follow me on Rumble, if everything goes bad on YouTube, we hit 100,000 subscribers, and they sent me our little silver plaque. So thank you to everybody. Our next goal is 210,000 Bitcoin. 210,000 subscribers in order to commemorate Bitcoin. Maybe we can get to 21 million one day, one subscriber for every Bitcoin. Big ambitious goal. If you prefer, you can watch and download on Apple Podcasts or Spotify, so that you can listen to this at the same time as going to the gym and driving or whatever you do. And everything will be backed up on simondixon.com in the Bitcoin Hard Talk membership portal with all previous episodes, a free digital copy of my book, the Self-Custody Bitcoin Guide with Andreas Antonopoulos, and some other things for you, like the Great Depression of the 2020s video series. And so we can share this journey of transition to a world of AI, Bitcoin, and central bank digital currencies. Now, we have one more section for you. So we're going to be going through part 3 of Bitcoin Hard Talk, episode 94, Is the Fed Dead? And this time we're going to be going through the Trump and Putin negotiations, the prospects of peace, and what it means for Europe by following the money.